If you had a trading system that was super simple and only required 1 hour of your day, and every time you were in front of the charts, the setup was there, would that help you become a profitable trader? For years, I struggled with spending multiple hours in front of the screen, only to find myself over trading, confused, and frustrated, which stopped me from making consistent payouts like this, and this early in my 8-year trading career. In this video, I'm going to talk about the 1 hour pattern that nobody talks about that has made my trading extremely simple. And not only that, but I'm going through multiple backtested trade examples to show you how to enter, exit, and most importantly, manage your trade for the most profitable result. If you could show up to the charts every single day at the same exact time and trade the same setup, would that help you become a profitable trader? Now, in this video, I'm gonna talk to you guys about the 1 hour trading strategy that nobody talks about. And this is the same strategy that has helped me make over hundreds of thousands of dollars in payouts. Now, by the end of this video, you'll be able to have a full profitable trading strategy that requires only 1 hour a day, have a simple 3-step checklist you can follow every single day, and be able to identify precise trading entries. Now, here is the 3 simple step process that we will use in order to break down this simple 1 hour trading strategy. Now, step number 1, identify our liquidity pools. For the sake of this strategy, we're going to use 2 simple liquidity pools. We're going to use our Asia range highs and lows, which is 6 p.m. EST to 12 a.m. Eastern time. And then we're going to have our prior day highs and low. We're going to map out that prior day's high, and we're going to map out that prior day's low. And that's it. We're going to have these 2 liquidity pools that we're going to map out every single day before equities open. Now, step number 2, we wait for an engulfing bar from 9 a.m. to 12 p.m. Eastern time on the 1 hour time frame. Now, what exactly is an engulfing bar? Here, we have a bearish engulfing bar. Simply put, a bearish engulfing is when price sweeps the prior bar's high and we have a close below the prior bar's opening price. Inversely, on a bullish engulfing bar, price sweep the prior bar's low and we close above the prior bar's opening price. And that is what creates a bearish and a bullish engulfing bar. Very, very simple. We're going to look for this with a run on stops from step number 1. So we're already going to have our Asia range high and our prior day high mapped out. Again, this could be either or, and sometimes it'll even take out both liquidity pools. Then we look for the 1 hour bearish engulfing bar where the candle forms, again, takes out the prior bar's high, and we have a close below the prior candle's opening price. Now, in a bullish example, we're going to wait for the bullish engulfing bar to be created after we take out Asia range low or the prior day low. And again, sometimes it'll take out both. So we're going to look for this candle to form where it takes out the prior bar's low, and then we have a closure above the prior candle's opening price. Once we have this sets up the stage where we can now have a tradable move in the direction for the next 1 to 2 hours. Now, step number 3. We're going to enter on the next candle's retracement, and then we're going to target a fixed 2R. So we're going to enter on this candle right here that opens up. It's going to retrace inside of the engulfing bar, and we're essentially going to look for an entry around the 25, 50%, or possibly the 75%. Again, same thing here on the bearish side. Now, this candle's range is simply a Fibonacci that we plot from the candle bar's low to the candle bar's high. And here are the coordinates for trading view, so you guys can go ahead and do that manually. Let's look at examples of live trades that were taken using this concept. Now, if you guys actually want to see this in real time, where I post my trade ideas and I post real life examples as it happens, make sure to join my public Telegram. It's 100% free. Link will be in the description below. Now, let's go ahead and let's hop onto TradingView. Now, most traders fail because they don't have a simple, repeatable trading strategy that they can follow. So, would a simple trading plan help you execute like a profitable trader? Now, we're going to discuss this full trading plan with risk management, how you're going to enter, how you're going to exit, and how you're going to manage your position. Number 1, we're going to look for the 1 hour EVP during the 9 to 12 Eastern Time, New York Open time window. Second, we're going to look for, again, the sweep of either Asia range high or low or the prior day highs and low. Third, we're going to enter on the 25% retracement of the EBP candle. And then we're going to target a fixed 2R. We're going to place our stop loss below the prior candle's high or low. And I'll show you guys this as we go through the backtest. And number 6, this is actually very important. We're going to have no entry if price does not trigger on the next candle. With this trading plan in mind, let's go ahead and let's start our backtest. So here we have the Asia session range high and low, and we also have the prior day low. So now we're just looking inside this gray box. During the New York open time window, are we going to see our EBP play once the market sweeps these lows? Now here we have the market, again, taking out the candle bars low, closing above the opening price, and this candle happened during the 12 o'clock hour. So what we're going to do now is we're just going to draw our Fibonacci from swing low to swing high, and we're going to leave a limit order at the 25% mark. So we're going to place our buy limit over there. We're going to place our stop loss below, again, the prior candle bars low or high. In this case, since it's bullish, we're going to leave it about 1 or 2 ticks right below that candle bar's low. And we're going to target a fixed 2-to-1 risk to reward. So let's go ahead and let's play this out. And let's see if we can get the fill on the next candle. So on the next candle, we do get that fill. And now we are going to look again for the market to hit that fixed 2-to-1 risk to reward. Let's play it out. And then right there, we have the candle expansion, full on reversal. Now, obviously this went way further, but again, according to our rules, we're going to stick to a fixed 2-to-1 risk reward. Let's go ahead and let's look at our next example. All right, so now we are inside the New York session. We're above our prior day highs, and we're also above the Asia range high. So let's see if we have any sort of setup. And right here we do. So the market takes out the prior bar's high, and we close below the opening price, meaning now we have our engulfing bar. So we're going to go ahead and again, same exact process, place our Fibonacci retracement, and we're going to leave a sell limit in this example at the 25%. Stop loss will go above the prior candle's high by about a tick or two. And then again, we're going to go for a fixed 2-to-1 risk reward right here. So let's see if we can get that fill on the next candle. And no, we do not. So again, per our rules, we are going to then remove the limit, and we are no longer going to take this. Even if the trade does set up later on, it does not matter. It must hit on the next candle. So let's go ahead. We're going to remove our limit. And just for argument's sake, let's just see how this plays out. And then this ultimately helps us avoid a potential loss. So let's go ahead and let's look at the next example. Now on this specific day here, we are below the prior day lows, and we are below the Asia session range low going into the New York session. And right here, we have our engulfing candle right inside of our time window. So again, the market takes out the prior bar's low. We have a strong close above the prior candle's opening price. So now we're going to go ahead and simply put, we're going to map out that candle bar's range. We're going to leave a buy limit at that 25% mark and leave a stop loss about 1 to 2 ticks below the prior bar candle's low. And again, go for a fixed 2-to-1 risk to reward. So let's go ahead, play this forward and see if we can get a fill. So we got a fill on this candle, and now the market is expanding higher. And as we let this play forward, let's see if we can get that 2-to-1 risk to reward. Now we're going into the new day. So again, we're still holding, and we're going to see if we can get that 2-to-1. So we're going to extend this out. And right there, the market hits our 2-to-1 risk reward. So far out of 3 trades, we got 1 no fill. We got 2 winners for 2R. So now we're currently up 4R. So let's go ahead and let's look at the next example. Now, going into the new day, we actually have another setup. The market takes out the Asia session range low. We close as an engulfing bar, and we create that during our time window. Now, for this example, I will say that we did take out the prior day highs, and we take out the Asia range high as well. I typically do not like to trade against, like when the market takes out the liquidity pools above market as well. However, we're going to stick to the system, and we're going to draw out our swing low to swing high in this example of the engulfing bar, because again, we formed inside of that 9 to 12 o'clock range. Again, we took out the prior candle bar, and then we're going to leave a buy limit in this example at the 25% mark with a stop loss, again, 1 to 2 ticks below that prior bar low. And we're going to go ahead and go for a fixed 2-to-1 risk reward. Let's play this forward. So we got a fill in the next candle, but we do have a very strong, aggressive, bearish move. Not something I usually like, but we're going to leave our stop loss. And we're going to see how this one plays out. This one ends up stopping us out. So this one was a loser, and we're going to go ahead and now move on to the next day and see if we could find another setup. Now, going into the new day, we have a beautiful engulfing bar. We have the market below the prior day low, and we took out the Asia session range low. So again, both of our criteria are met. So now what are we going to do? We're going to draw our Fibonacci. Again, very simple, repeatable process that literally anyone, even a complete beginner, can start implementing this strategy. We place a buy limit at the 25%. We put a stop loss, again, 1 to 2 ticks below the prior bar low, and we're going to go and aim for a fixed 2-to-1 risk reward in here. So again, fixed 2-to-1. Now, let's go ahead and let's see what happens. Do we get a fill? Yes, we get a fill. This was a deeper retracement, but we'll go ahead and see what happens if we can get our 2R. Now, the market does start to consolidate going into the new day. So we're going to, again, the system is going to be a fixed 2-to-1 risk to reward, either stop loss or TP. Again, flagging around, and then it finally hits going into almost day 2. Now, sometimes if the market is literally like right there, and especially if we take out a liquidity pool, you could kind of get out of the trade early, but nonetheless, following our system, we got a 2-to-1 risk to reward. Now, let's go ahead and let's look at our final example. Now, in this example here on Thursday, we do have the market taking above the Asia range high, and we do take out the prior day highs. Now, before we get into this example, on this day here as well, how come there was no entry? Again, simply put, even though we formed an EBP, we did not take out the prior day lows, and we did not take out any significant liquidity pool. So for me, this one was not something that I would typically take based off this specific strategy. And again, this actually helped us avoid a loss because that criteria was not met. Now, on Thursday, we have a nice setup. We have the engulfing bar forming inside of our time window. We're taking out the Asia session range. We're above the prior day highs. So let's go ahead and see if we can get a fill at the 25%, and our stop loss, again, very simple, above this prior candle bar's high, and we're going to go for a fixed 2-to-1 risk to reward in here. And let's go ahead, let's play this forward. And unfortunately, on this example, we did not get a fill. That will happen, the market will move in our direction, but that is just the reality of trading. Now, as seen through this backtest, you guys can see the effectiveness and the simplicity of this system and strategy. Now, if you want to make this system and strategy that much better and that much more precise, I highly recommend you guys check out my daily bias video. Because if you can pair this type of setup with a proven daily bias system, you will have the recipe for a much bigger trading opportunity. So that video will be in the link in the description below, and it'll pop up right here on the screen. So make sure you guys go ahead and check out that video.